Well, stocks closing the day higher as investors kick off the holiday shortened trading week. And on the heels of last week's Fed meeting, the market has the potential to be less Fed focused in 2025 and shifting toward fundamentals. Joining me now is Dan Crowley, Nightview Capital Portfolio Manager. Dan, it's good to see you. So just starting at a high level here, Dan, interested to get your market thoughts. Listen, 2024 was a great year, and 2023 was a great year. What do you see ahead in 2025? We have a lot of strategists come on, Dan. I asked them for their S&P targets for 25. I think I hear a lot of 6,500, 6,600, but what are you looking for?
Yeah, I think overall, we think it's a great time to be an active investor. I think we have a robust economy. The labor market's held up. Inflation has been more or less tamed. And then importantly, I think we're heading towards a period of rapid technological shifts. And historically, whenever that's happened, significant opportunities have been unlocked. We see this time as no different. So, especially if we take a multi-year kind of time horizon, we really like the opportunity set, and we're optimistic.
Big tech has been the place to be, Dan. Do you expect that to continue in 2025 again?
Yeah, we do. I think kind of the platonic ideal of two guys in a dorm room starting a startup are, going to be difficult during this cycle. I think it's going to require a massive amount of capex, at least to build the initial infrastructure structure. But we think it's a massive opportunity. For us, we view AI, on par with the internet in terms of its ultimate economic impact. And we think the velocity of change is going to be faster than, how the internet played out. So, we think opportunities are going to abound.
So your enthusiasm about AI, Dan, what's a pick in that space? Would it be, the poster child of AI? Would it be NVIDIA?
Yeah, we're kind of moving into the next phase of AI. So, one thing we're excited about is real world AI. So we think we're at an inflection point for these intelligent automated systems. So we see basically twofold opportunities playing out here. The first is an entirely new product category. So for a company like Tesla, that's autonomous driving and ultimately humanoid robotics. And for existing business lines, like at Amazon, we see the ability of AI to drive efficiencies. We heard Andy Jassy 2 weeks ago say that, at an existing distribution center, they were able to reduce cost to serve by 25%. If you extrapolate that out to the whole retail business, those are pretty significant numbers. So we're kind of trying to move into the next phase here of where we see AI playing out.
On Tesla, it's interesting, Dan, because we've had analysts come on the show, bullish like yourself, and a reason that they make for Tesla is because they'll say Musk made this bet on Trump, and it was the right bet, and now he has the ear of the president-elect. And their bet to their clients is, well, Trump is now he's gonna speed up, he's gonna accelerate self-driving technology. And that is one big reason they're actually bullish on Tesla. Do you share that? Is that one of the reasons for your optimism?
Yeah, obviously we were bullish kind of regardless of the outcome of the presidential election. But when we look at the potential for a federal framework for autonomous regulation, as opposed to kind of state by state and piecemeal, I think that can expedite the timeline significantly. And it also just provides more clarity. That was kind of an uncertainty. And so once that's removed, I think the market is able to, get a little bit, more comfortable with the future cash flows discounted back. And I think that's partially why we've seen a repricing event.